Hello, this is Assistant Professor Randy Minton of Thomas University, and today what I'd like to do is walk through the problem on page 259, number 51A. And I have already put in all the numbers necessary to solve this particular problem, and that's so that we can keep the overhead down on the one hand, and the other hand is I want to explain why I'm doing what I'm doing as I go through these. So without further ado, let's just say that what they want us to do, and this is from the side of the purchaser. We'll do a video a little bit later on from the side of the seller. But from the side of the purchaser now, what we want to do is make the journal entries necessary to record the inventory, accounts payable, and payments of those accounts payable, and so forth for the purchasing company. Now, let me just also mention that this tells us that we're using a perpetual inventory system. And anytime we use a perpetual inventory system, we use the term merchandise inventory because it's coming into inventory and we're tracking it as it comes in, and we're also tracking it as it goes out. So we're always going to use the term merchandise inventory because it's going directly to that account. If this were a periodic system, which it is not, but if it were, we would use the term purchases. Remember that in accounting, purchases means some item that we purchase for resale. Okay, so it's a little bit different depending on whether we handle this thing on a perpetual basis or a periodic basis. Now, I would tell you that it used to be the periodic inventories were quite common. Now, because of the advanced technologies that we have to be able to scan merchandise in and out, more and more companies are using perpetual inventory systems. And it's a very good thing, actually, because when we know pretty much without consideration of shrinkage of some sort or another, if we know what's in inventory when a customer asks us that if there's something in the back that's not on the shelf, we can look it up very quickly and give the customer a response. Okay, so we're asked to journalize several entries here, starting with the first entry on October the 1st and ending up with some entries made on the 31st. So the first entry actually occurs on the 1st. I'm going to pop the date in here, and then we're going to talk about the entry itself. It says we purchased merchandise from UK Imports Company, $14,448, terms FOB destination, the net due in 30. That's what N/30 means, net due in 30. So that's the way that we purchase this particular item. So let me point out a few things. First of all, it's coming into merchandise inventory. Merchandise inventory is an asset. Merchandise inventory is going up, and all assets go up on the left and down on the right. So it's increasing the inventory. Additionally, we have an accounts payable. Accounts payable is a liability. It goes up on the right and down on the left, and you can see since it's being credited, it's going up on the right. So both merchandise inventory and accounts payable are increasing. Now, also in this problem, it says that the freight on board was to the destination. That means that the seller is paying the freight. It's not being prepaid, because if it was prepaid, we may have to handle it in a different way depending on how they want to do it. But in this case, they're taking the freight on as a payment for themselves, so the entire amount coming in is going to be merchandise inventory. Also, the terms are net 30. That means that we're going to pay this invoice 30 days hence, because we don't want to give up our money any sooner than we have to. Okay, so the next item. On the 3rd, we purchased merchandise from Hoagie Company, $9,950, terms FOB shipping point, 2% 10 net end of month. That's what EOM stands for, is end of the month. Prepaid freight of $220 was added to the invoice. Now, this one is a little bit trickier. We have some freight that they paid, and they let us know that they paid $220 prepaid, and that's because they want us to know that that freight is not part of the discounted feature. Okay, so in other words, we do not get to discount the freight. We only get to discount the merchandise. So in this case, I've worked out a little bit of a formula over here for you to see. This was the amount of the original invoice, $9,950, plus the $220 in freight. We do get the discount, of course, on the actual merchandise itself, and the 2% that we arrive at gives us $199. The difference between the $99.50 and $199 is $97.51. In addition to that, there was a $220 prepaid freight charge, bringing the total up to $9,971. Now, it's important to note this because if we have to do any other transactions involving this invoice, we need to make sure that we've separated the freight from the rest of the transaction. Okay, so in this case, this is the total that we arrived at over here when we worked through the calculation. And by the way, I want you to be able to see these discounts in this case, just so you have an idea of what's happening here. But in what I would do, instead of looking at 2%, I would simply look at the reciprocal of 2%, which would be 98%, and that would give me the actual net amount to be paid. In other words, it would give me this amount, and then I would just simply add the freight to it. Okay, so merchandise inventory, again, merchandise inventory is going up. It's an asset. It goes up on the left-hand side, and we're going to pay the amount later on. That makes it an accounts payable. Accounts payable goes up on the right. That's the credit side, and down on the left. In this case, we're increasing accounts payable and also merchandise inventory. The same thing we did up here, just the difference in that we have some freight to consider and a discount to consider. Okay, on the 4th, purchase merchandise from Taco Company, $13,650, terms FOB destination, means they're paying the freight. 2% 10, net 30. We don't have a breakout of the freight, however, so we would consider it just as part of the inventory. So in this case, merchandise inventory, $13,377, and the way we get to that is by taking the gross amount, calculating the 2% discount, subtracting this discount from this gross amount, we get to the $13,377. The entry itself is exactly the same as the entry up above, the two entries up above actually, except that this has changed in that it's Taco Company being affected instead of UK Imports or Hoagie. Okay, so that's that part of it. Now, let's take a look, and whoops, I need to put my date in here. It was the 4th, right? And the next entry, issued a debit memo to Taco Company for $4,550 of merchandise returned from the purchase of October the 4th. Now, this one's a little bit tricky too, in the sense that we took a discount and recorded the amount that we owed Taco Company at the net. Okay? So when we issue the debit memo, since we only recorded the accounts payable here at the net minus the discount, when we issue the debit memo to Taco, what we're going to do is subtract the 2% from it as well. So if we look at the calculation that I've done over here, we started out with $4,450. We had a 2% discount that we had to take off of that, so the actual amount of the debit will be $4,361. Debit accounts payable Taco, because the accounts payable is now being dropped, so since it's a normal credit, if we debit it, it means it's coming down. It's just like we paid cash for it. And the merchandise inventory has been sent back to Taco, so we don't have it anymore. It must come out of our inventory system. Okay, and that was on the 6th. Okay, on the 13th, paid Hoagie Company for invoice of October the 3rd. Well, this is the invoice that they're talking about right up here. Okay, and since they didn't tell us that we returned anything or anything like that, then the assumption is that we must pay the entire amount of the invoice. So we would debit accounts payable, meaning that we're dropping the liability because we no longer owe it. And since we pay it, it's coming out of cash. Now, since this is the first cash transaction, let me just point out to you that I've got parenthetically wholesalers. Now, the only reason I did that so that you can kind of see where the cash went, because when we get into the next problem, you're going to have some sales that involved MasterCard and American Express and retail customers and so forth. So when you actually look at this, I'm only putting this in here parenthetically so you can see where it went, how it ties in, but the actual account would just be cash. It wouldn't have wholesalers on it. I just did that so that it would be easier for you to see what was happening here. Okay, and of course the amount is exactly the amount that we had right up here. Okay. All right. Now on the 14th, we paid Taco for invoice of October 4th less the debit memo. So on the 14th, let's go over here to the calculation that I made. We started out with a merchandise inventory of $13,377. We then discounted a return by 2% and took it out of merchandise inventory. So we arrived at a new number that we owed Taco of $9,016. If you were looking at a T account, you'd simply see on the debit side, on the credit side, you'd see $13,377 owed. And then on the debit side, you would see $4,361 that came off the accounts payable. So we add likes, subtract unlikes, and in this case, we would have $9,016 remaining that we would have to pay. Accounts payable, it's on the right-hand side of the accounting equation. That means it goes up on the right, down on the left. We're reducing it, so it requires a debit entry to accounts payable Taco Company. And we're paying cash, and the cash is reflected in the same amount of $9,016. Cash is an asset. Assets go up on the left and down on the right. We're spending it, so it's coming out of the account and it's going down. Hence, it has to be on the right-hand side. Okay, on the 19th, we purchased merchandise from Veggie Company for $27,300. And it tells us that the terms were FOB shipping point net at the end of the month, net due at the end of the month. Now, in this case, there is no discount involved, so we don't have to worry about a discount and calculation of the discount. We owe them the actual amount. It's also FOB shipping point. That means that they're sending it to us. We're going to have to pay the freight. Okay? So at this point, we're just going to record the gross. We don't know what the freight is yet because we haven't been billed for it. We have a debit to merchandise inventory because merchandise inventory is going up. And we have a credit to accounts payable Veggie, and it's going up as well. Okay, the liability is increasing along with the asset. Now, the next thing that happens to us on the 19th is that we actually get the bill, so we have to pay the freight company. And because this is a perpetual system, merchandise inventory is debited directly, okay? And the other side of it, of course, is cash because we're paying the cash out. In this case, we have $400 worth of freight expense that's going to be part of the merchandise inventory, and eventually we'll take it out of cost of goods sold. That's why I say that it's actually ultimately an expense, but for right now, it's part of our asset merchandise inventory. The cash is going down, so it's being credited. So we have basically an asset swap here. We're getting merchandise inventory that's an asset going up, and we have cash, which is an asset coming down. Okay, the next one. We have on the 20th, purchased merchandise from Caesar Salad Company. So I'll put in my date of the 20th. And we know that merchandise inventory is going to be affected and accounts payable due to Caesar Salad. Now, what are the terms? $22,000 terms, FOB destination 1%, 10, net 30. So they're paying the freight. Okay. So what we will do is we will record this transaction at the net amount of $21,780. How it's calculated? $22,000 was the original invoice. They gave us 1% on it. So 1% of $22,000 is $220. The net then is $21,780. If you wanted to do it in one step, you would simply say that $22,000 times 0.99, because that's the reciprocal of 1%, and that would be your response. Okay, the next one. On the 30th, we paid Caesar Salad Company for invoice on October the 20th. And remember, what happened here was they gave us 1% if we paid within 10 days. So that's why this is happening on the 30th. I'm going to put in the 30th here. The accounts payable will go to Caesar Salad, and it'll be for the net amount that we calculated right here. And cash is the other side, and that shouldn't say retail customers. I'm sorry. That should say cash wholesalers. Okay, and that takes care of that one. Again, accounts payable is a liability. It goes up on the right and down on the left. I'm paying it, so it's going down. Remember, this is the amount that I owe. I owed $21,780, and now I've paid it, so I no longer owe it. So this is basically just a wash. See it? $21,780 credit, $21,780 debit. We add likes, subtract unlikes in all of our accounts. So in this case, we come to 0. Okay, and you're basically left with merchandise inventory being purchased and cash being paid out. Okay, on the 31st, we paid UK Imports for invoice of October the 1st. Now remember, UK Imports sold us some stuff that, and I should have changed all of these, but I didn't, I guess. Let me just hang on just a second. Let me get this right so I don't get you confused when we get to the next section. What happened in this case is that we bought some merchandise on the 1st from UK Imports for a net of $14,448. There wasn't any additional freight considerations and no discount. So now we're just paying it. So that's happening on the 31st, which is exactly 30 days from the date that we actually bought the merchandise. Okay, on the 31st we paid Veggie Company for the invoice of October the 19th. And that one I didn't have in here, but so we'll just do it very quickly. And what are we paying? Well, we're paying the accounts payable from Veggie. So here's accounts payable, Veggie Company. And notice that, by the way, on all of these accounts payables, there's now not just accounts payable, but it also indicates to you a name. And you would have that through your subsidiary ledgers because you need to know who it is that you owe money to. In this case, it's Veggie Company. And we would come up and find the actual amount that we owe Veggie Company, which is this guy right here. And I'm just going to say it's equal to this guy right here. And on the other side of this, we have cash to wholesalers. But again, it would just show up as regular cash. We wouldn't say for wholesalers or anything like that. I'm just trying to make it a little bit, hopefully, make it a little bit more understandable for you. So at this point, we have gone through every single one of these entries. And notice the reason that we're paying Veggie Company now, let's go back to the 19th and just look. And it says that there weren't any kind of special things going on, but note that the net was due at the end of the month, and now we're at the 31st, which is the end of the month, so we're paying the net. At this point, we are finished with problem 5.1a on page 259, and there will be an additional video done for problem 5.2a as well. So thank you for your attention, and I'll see you around.